Good morning, it's Harvey Jackson. We're just going to get into some of the top news items here. U.S. farms get an aid package. Trump announces that with some farm lobby groups in his presence. And he also talks about the right to repair, taking off some of the environmental equipment off of tractors. And he did mention even putting tariffs on potash. But let's just get into it here. So this is the aid package, and not sure how it's actually going to get paid out just yet. But and that's the other contingent is just where and how is it going to get paid out? How quick? So far, the purchases of the Chinese orders is lacking. It's just shy of 25%, not even at 3 million metric tons as of right now. The orders for the 12 million. Now, Bassett made the 12 million move to a different crop year. I don't know which crop year it is, but end of February now. But they still have not signed the deal, and I think the market is getting a little tired of no news on that one, as the exports have not really kept pace to the initial announcement of by the end of this year.
Does come in from Canada, and so we'll end up putting very severe tariffs on that if we have to, because that's the way you want to bolster here, and we can do it here. We can all do that here, but I would say what you do, you put very severe tariffs on from coming into other countries. You'll be making your own fertilizer very soon.
So I just wonder where they're going to make their own potash. I just don't know if that's available, but they definitely could ramp up the nitrogen manufacturing in the U.S. I think they import about 1 million metric tons from Canada. So, yeah, they definitely could increase some of the production there for sure. But potash is not everywhere on the planet here. Russia has some, we have some. I'm sure there's other ways to maybe get some of that, but that's still going to be a product that's a little tougher to get.
True, but we still had consumer carbon pricing. When Prime Minister Carney eliminated the consumer carbon pricing, we said at the time that we would strengthen industrial pricing to make up for the loss.
I thought that was a good clip there. So the industrial carbon tax or pricing, whatever, is definitely trying to make up for the carbon pricing tax that they had on. They took that off, really helped the gas prices at the pump, and kind of bolstered their position to be able to win the election and that kind of stuff. So so this is just the excerpt where Trump took off the environmental restrictions off tractors. Soybeans falling below $11 is a bit of a watch out here. Ahead of the USDA, we'll see what they print as far as where the demand is going and what they're going to print this time. But I think the January report is usually the bigger report, where they have a lot more world numbers, and they actually have the finalization of what got planted for wheat in the world, and I think that's the one I want to pay attention to. Quick look at the weather. This is the Nutrien Ag site. They're talking about cold, and well, that's Canada. Snow band, basically, covering Manitoba corner, southeast corner, and into Saskatchewan up the Yellowhead corridor kind of scenario. This was a problem area. Now it's not. They definitely got some moisture and pretty well finalized planting. So that anomaly is basically moved to next to nothing at this point. So let's have a look at the markets here. And again, when I took the snapshot, it's a little bit different as the market trades. As we can see, often the market trades positive on the overnight, and then down during the day. We'll see how it continues to trade, but up 350 at the moment. So 617 futures on the front month. Rapeseed 475 down $1.25. Soybean oil trading at 51.25, basically flat. West Texas trading at 59 barrel. Soybeans down to 10.92, down a penny as we spoke here. Red Spring wheat is up just close to 2 pennies at 5.73, and your other wheats are trading a couple pennies to a penny and a half higher. Corn up 2.5 pennies, and the Canadian dollar is just slightly down. A quick look at this, you can see this leg down right at this pivot retrace or pivot uh, pivot line, and it traded below it. Now we'll see if we can get down into this range here, the 583 to 587 in that range. We're definitely in that sphere there, but you can see we're in a different level of retracement now. It looks like we're trying to bounce off of the 38.2 retracement value on the November contract. European rapeseed kind of chugging away sideways here. You can see that we got above that trend line now. We're trading at $149. A differential between the Canadian canola and European rapeseed priced in Canadian dollars. Soybean oil really hasn't been doing anything. We'll have to. That's the catalyst that's going to get broke if there's going to be one that breaks. And yet you see the soybeans taking its tumble, and the meal was doing the same thing. Soybean futures for November, not quite as emphasized. If we're planting soybeans there, I'd still be looking at getting 25-30% sold there, depending on the grower. Crude palm oil, right at the 50% retracement value for this move from here to here. Have a look at the Canadian dollar. We're breaking out of that trend line. Now my upside target would be somewhere in this area at 73 cents and a fraction higher to kind of clear some of the U.S. dollar deficits on some of the brokerage accounts. U.S. dollar index staying below that $100 index. This is the Brazilian U.S. pairing, and it had a pretty good leg up, and that's actually maybe helping the U.S. or the Brazilian farmer to sell their product. Here's the boring red spring wheat basically chugging sideways, and I'm just highlighting these areas here. So this is the U.S. or the China or the Russian war, drought from Russia, and drought again. And I believe back in 2008 when the wheat board got squeezed, I think it started off with a Russia problem as well. So what I'm really looking for is if there's going to be a Russian problem. Kansas, we've got this pivot point here too. We're kind of getting caught in this kind of a wedge area here on the Kansas, and Chicago's doing the same thing here. Now the French wheat is doing the exact same thing. Corn futures, the 200-day moving average, and the pivot extension, basically chugging sideways here as well. Quick look at the meats here. So live cattle currently resistance rate at the 50% retracement from the high to the low that we just made. We'll see if it can break out, get into that 61.8. If it does, it's very likely to create a bit of a wave back down. Feeder cattle, same thing, and lean hogs, they're all the little bit lower on the retracement, but decent recovery. That's all I have for you.